I want to go into now a brief couple minutes to give you sort of a product spotlight in terms of a loan program that I think needs to get more attention in the marketplace, particularly for home buyers. And as you see there in our header on this page, Opportunity Alert. Low rates with our Govy Arms. Why 5-1 Govy Arms? Now, what I mean by Govy Arms, FHA has a 5-1 ARM product. Now, what does that mean? This is a hybrid adjustable rate mortgage. The 5 and 1 mean the initial rate and payment are going to be fixed for 5 years. After that 5 years, the loan will adjust annually for an additional 25 years. So it's a 30-year loan. So why would a 5-1 Govy ARM be of interest, and why you should consider this if you're a prospective home buyer? Uh, Let me give you a few reasons. And by the way, this I'm bringing this up because I've always said, even if you have a good credit score, if you're looking to buy a home and you're going to put less than 10% down, 3% down if you're a first-time home buyer, which a conventional loan allows, or 5% down, something less than 10% down, I always urge a prospective home buyer and their agent to consider FHA. FHA is highly competitive to conventional financing with minimal down payments. Yes, the mortgage insurance is a little bit higher than conventional, but that's actually only true for higher credit scores. When you get into the lower credit score spectrum, under 700, under 680, down in the 640, 630, 620 range, the conventional mortgage insurance with less than 10% down can get awfully expensive. FHA loans, therefore, should always be a consideration, I believe, in almost any market if the loan amount you need is within the FHA limits, which do vary by county. And if your loan amount you need is within those limits and you're going to put a minimal amount of down payment, again, FHA requires a minimum 3.5% down. And by the way, you do not have to be a first-time home buyer. That's a myth. That's a misunderstanding. You should always look at FHA as an option. And so given that backdrop that I've talked about for a very long period of time, that's why I want you to know about this 5-1 Govy ARM, the FHA ARM, because this really has been kind of under the radar and is a terrific product that you should consider. Now, the first reason why is because you're going to be able to get lower monthly payments compared to a fixed rate mortgage. These ARM loans, these 5-1 ARM loans, are offering an interest rate in the very low fives. For example, I can originate for you today a 5-1 FHA ARM at a rate of 5.125%. When you consider conventional loans as at least 1% higher than that, you got to look at this as an alternative. 5.125% is what you can see in terms of a rate available today for a 5-1 ARM. And again, that rate and the corresponding payment that comes with that would be fixed for the first 5 years of the loan. And of course, because of that very low rate, you're going to see a much better payment than if you look at a conventional fixed rate or even a FHA 30-year fixed rate. Remember, on our rate grid, an FHA 30-year fixed is about 5 5/8. This is a 0.5% lower than an FHA 30-year fixed. So there you go. Whether you're looking conventional or an FHA 30-year loan with less than 10% down, this 5-1 ARM is very attractive and should at least be part of your consideration and a conversation we should have when you're contemplating which loan product to take. So the other thing about this that is very important to understand is qualifying. With a 5-1 ARM, you're going to qualify at the start rate. Again, most ARM loans, certainly conventional adjustable rate mortgages, if you're going to have a fixed term of less than 7 years, like a 5-year ARM, 5-1 ARM as we call it, or even a 3-1 ARM, you are not going to qualify. In other words, your debt ratio is not going to be calculated off of that initial 3 to 5 year fixed payment. It's going to be calculated at the index plus margin, and a lot of times they'll add 2% of that. They're setting an artificially higher qualifying rate to guard against potential future adjustments upward in the loan product. FHA 5-1 ARM doesn't work that way. That 5.125 rate I mentioned earlier that we can offer on a 5/1 ARM, your debt ratio will be calculated off of that rate. That gives you more purchasing power. You can qualify for a greater loan amount with this product by nature of the fact that it's got a much lower interest rate starting off than a conventional or FHA 30-year fixed. The next thing to understand about this product is the cap. The number of one in the 5/1 descriptor of this ARM loan means the annual adjustment cap is only 1%. Now, what that means is after 5 years, this loan is going to adjust the first time in the beginning of year 6. The adjustment is going to be based on the index that this loan is tied to, which I'll mention in a minute, with a margin added to that, and then that sets your rate for year 6. But if that formula, index plus margin, beginning of year 6, calls for an increase in your rate by more than 1%, you're capped. The increase will be capped at 1%. So that means if you got one of these at 5.125, you're now in year 6, you're about to have your first adjustment. And if the index plus margin calls for a rate to go to, say, 6.5, you're not going to pay 6.5. You're going to be capped at 1% above your start rate. That's 6 1/8. 5 1/8 plus 1, 6 1/8. This is the best annual cap on an adjustable rate mortgage on the market today, and that frankly has been for pretty much since this program was created. A conventional ARM loan, conventional adjustable rate mortgage that has annual adjustments, what you're going to see is the annual cap is going to be 2%, not 1%. So you're going to be exposed to a higher amount of potential increase than you will with this product. Not to mention the fact, a lot of a lot of conventional ARM loans, the initial first year adjustment, sometimes the cap is the same as the life cap, meaning in that first year after 5 years, you could potentially have an increase in your rate of up to 5%. With the FHA ARM, there is no such initial cap of 5%. You're at 1%. So that's why this is an incredibly good and safe product for borrowers, because you are insulated from substantial increases even when the loan starts to adjust after the 5-year fixed period. And then the last thing I want to mention about this is the margin and the index. Now the margin, let me kind of rephrase this. The index that this loan is tied to is the 1-year CMT. That's the 1-year constant maturity treasury index. That's what this loan is tied to. So what that means is after year 5, at the beginning of year 6, that index will be used to set your rate for year 6. And then what is going to happen is a margin is going to be added to that 1-year CMT. And in this case, it's 2.25%. That's a very good margin, a very low margin. And right now, the 1-year CMT is about 3.85. So if you take 3.85 plus 2.25, that's going to be about 6.15. That would be your potential rate in year 6, again, subject to that 1% cap. So this particular product has a very good index with a pretty low value. The 1-year CMT is pretty darn competitive as an index for ARM loans. And then when you're adding only a margin of only 2.25%, that means even if you're going to have an increase within that 1% cap, you're going to be better off with this kind of adjustable rate mortgage than virtually any other conventional adjustable rate mortgage. That's another reason why this is a tremendously good product. It needs to be better known. I want to get this out to all of you. So if you're either a prospective buyer and you're contemplating FHA as an option, we want to make sure this becomes part of the conversation. I'll be happy to give you some numbers to compare this to a regular FHA 30-year fix. And again, certainly too, if you're an agent, you're working with a buyer, and you've already determined FHA financing is what you're going to use, or maybe what you need to use for qualifying purposes, this has to be in the conversation too, because this, as I pointed out earlier, could provide you even more purchasing power than FHA loans tend to provide you anyway compared to conventional financing. So get the word out. Anybody considering FHA financing for the purchase of a home, give me a call. Let's have a conversation. I would be happy to give you some numbers to go over so I can show you the benefits of this product compared to a 30-year fix. And of course, what we would do there is talk about the scenario of the 5-year fixed term. What happens after that 5 years when the loan starts adjusting? What kind of things should you consider when you're contemplating using this product? How safe it is, and so forth. So we can have that discussion. I can show you some numbers, and I think once I do, you're going to find this should be a very good option for you to consider in buying your home, particularly if it's your first home.